Ladies and gentlemen, esteemed guests and colleagues, it gives me great pleasure to welcome you all to this enlightening session on Inside the Central Bank Digital Currencies. Central Bank Digital Currencies, or CBDCs for short, are not just a buzzword. They represent a profound shift in the financial landscape. And today we gather to explore potentials of CBDCs, their benefits, and the way forward. With the right approach and theory, CBDCs can enhance financial inclusion and foster economic growth. What makes this session even more special is the active involvement of the ADGMA Research Center in this critical domain. Notably, two of our esteemed panelists are ADGMA Research Center Advisory Board members, alongside expert business leaders. This panel will bring invaluable insights and expertise in our conversation. So let's delve in this pivotal conversation with our esteemed panelists. David, what are the developments you're seeing in the capital and financial markets that makes you so enthusiastic about CBDCs?
Well, there's a lot of reasons to be enthusiastic about CBDCs, not just globally, but certainly in this region. But I want to frame that answer by reflecting on the journey we've been on in the last 8 years. So for those of us that have been in blockchain or distributed ledger technology, we always knew the real magic of the technology was the atomicity. So how can I link a smart payment to an event? So my money is not released until a package is delivered and scanned, till a bond is issued, or till some other activity happens. But for those of us that have a background in institutional finance, there really wasn't an option to have money on ledger. So on R3, on Corda, we have tons of different assets and 100 plus applications. But when we try to settle with money, we actually have to jump off chain and go through a traditional channel, which introduces all sorts of inefficiencies and risk, and is far from ideal. The crypto craze was just a distraction because that's not appropriate for institutional finance. And while regulated stablecoins may be an answer at some point in the future, there's no consistent regulation. So what sits at the center of finance, at the center of everything, is money. And what sits at the center of money, which is the central banks, and the central bank digital currency. So when we think about the promise of the technology, and there's been scores of papers written about the billions of dollars of savings, about financial inclusion, about new products that can be built on our technology, we need money on ledger. That is the grease, if you will, that will lubricate the wheel and accelerate all of this so that we can actually realize the potential. So let me just give you a quick current example, given the limited time frame, is there have been scores of digital bonds issued. And that's exciting for a lot of reasons, because you can fractionalize them and a lot of other things you can do with them. But the vast majority, except on SDX, have been really issued for show and then are novated back to the traditional rails. And a lot of those traditional rails are systemically important financial institutions with 40-year-old technology. So we don't want to go backwards. But to have a truly persistent digital bond, we need to have CBDC on ledger as well, so that we can lend those bonds, so that we can repo those bonds, and so that we can pledge those securities. And if you haven't read about it, the Swiss National Bank, the Central Bank of Switzerland, has begun to make CBDC available on SDX, which is the Swiss Digital Exchange, a sub of 6. And have issued a number of truly digital bonds that can persist and trade in the secondary market. Derivatives can be written against them and the like. So we need to see more of that. And a little later, maybe we can talk about the international trade and what it can do for remittances and the like.
Definitely. Marcus, what are the use cases that can be built on top of a CBDC infrastructure? And how can this boost financial well-being for individuals and organizations, particularly SMEs?
Yeah, thanks for the question. So I think thinking about CBDCs, it can be such a broad term, right? So there's many kind of design, kind of decisions that you need to make as a policymaker, as a central bank, in order to put forward a new kind of digitally native currency infrastructure. And based on these decisions, I think the benefits may vary quite significantly. I mean, thinking, for example, about retail CBDCs, in countries where there is not an established kind of retail payment infrastructure, a CBDC retail payment rail potentially can bring a lot of benefits in terms of the sovereignty of the infrastructure, kind of reducing risks of relying into private entities that can potentially be not as efficient, have less, for example, incentives to innovate and develop further the solution in order to solve retail payments. It can also give better access to people who don't have access to the formal kind of banking system in order, for example, to have bank accounts and carry cards and so on and so forth. So these currencies can be distributed, in mobile devices, for example, increase usabilities by citizens who don't have access to physical cash, for example, away from bank branches and so on and so forth. But in general, kind of thinking about operations in both retail CBDC kind of examples and wholesale CBDC examples, you can think about streamlining reconciliation, and that kind of applies to payments nationally, but also internationally, which is, I think, another kind of issue that we will discuss shortly. And again, depending on the way you kind of architecture the CBDC system, you can give incentives for people to innovate on top of the CBDC infrastructure. And just to give you an example, I mean, we've done a lot of research at the University of Manchester based on the design principles, but one of the frameworks that has been proposed actually in a white paper from the Bank of England was to create a platform arrangement where, for instance, a central bank would put forward the ledgers, right? And then would have APIs accessible to private entities to design interfaces, and through which these interfaces you can also kind of develop smart solutions and leverage smart data, and also further innovation that sits a layer on top of the central bank kind of ledger layer, if you want. So these are some of the benefits I think that can be delivered.
You mentioned retail CBDCs. Barney, do you think retail CBDCs can cause any risks to the retail banking systems?
So this is a massive topic, and you put your finger on probably the biggest live discussion around CBDCs globally. I mean, the answer depends on how you do it. So inherent in CBDC, I mean, there are different ways of technologically of creating CBDCs. Some have greater risks than others, some are more expensive than others to operate, and so on and so forth. But inherent in all of them are things like cyber risk, AML risk, data privacy risk. And if there's concern about any of these things, that can create a run on the currency, because if you've got a digital asset that you might want to get rid of it very quickly, and you could, subject to an FX ability to trade. On the other aspect of all of this for retail is whether or not you have a direct claim on the central bank. And there's been a lot of talk about that. The Bank of England have done a lot of papers on this, and some thinking. I mean, obviously, if you have a direct claim on a central bank, that's more valuable than what we all have today, which are claims on commercial banks. We have an account with a commercial bank that's referred to as commercial bank money. And the risk, therefore, if the bank looks as if it's got a solvency issue, is that it's a run on the bank, and you want to be the first out, not the last. And if you have a central bank claim available, you could have a run where people put their money into the central bank, and that would then destroy the banking system potentially, at the most nuclear level, or it could at least reduce the ability for banks to fund using retail deposits, which is key for maturity transformation and lending into the real economy. As I understand it, in the UAE, you're looking at not changing the structure of the current banking system, which is good. Therefore, for retail, I think we're really just talking about the first risks I mentioned. The last point is on ADGM. We're sitting in ADGM. This entire island is under a legal system, and so is the next door island now, Al Reem Island. It was set up as a brainchild of some brilliant people in the UAE and Abu Dhabi. I actually led the team conceiving and drafting the legal and regulatory framework of the rules and regulations on the common law system. And I think that provides phenomenal legal certainty around the use of these sorts of assets. Already ADGM have produced rules for digital assets, and I think ADGM can become a hub for the trading of CBDCs, which I think is legitimate under the Constitution, which would also open up a massive commercial opportunity for the UAE and the region.
Amazing. Speaking of risks, Kimo, how can we ensure that CBDCs are successful or at least mitigate the associated risks?
Yeah, so there was an example in the previous session about a rocket ship that takes off ground and how hard it is for a startup to take off the ground. And I think that's the challenge that CBDCs will also have, is how to get adoption, how to get actually people to use it, how to make people compelled not using credit cards or debit cards or other means of payments to make payments and make those payments instead with a CBDC. And I think in order to solve that challenge, I think central banks and banks need to have a bit of a startup mentality. Think about doing a lot of analysis, data analysis, simulations, understand the customers. Quite a number of central banks do cash surveys. How do people actually, or payment instrument surveys, how do people actually use different types of payment instruments? Where to find pockets that could be starting first, like Facebook started off with a university campus to get those network effects solved, and then jumped into other pockets and then connecting those pockets. So what is the adoption path for a CBDC? I think that's a big challenge to come. And a lot of the CBDCs, the retail CBDCs that we've been seeing launched around the world, haven't actually properly solved that challenge yet. I think that's going to be a big one. On the risk side, I think AML was mentioned and fraud. So I think the big challenge there is not in order to have the right people use the CBDC and not the wrong people and not for the wrong purposes. Because what we've seen in the, especially in Southeast Asia and also in this region in the last few years after COVID, a lot of new payment, instant payment systems have been set up, and a lot of people have been brought into the realm of digital payments. And that has created a lot of opportunities for fraudsters to get to their monies quickly, because there is a quick way of acquiring funds from people that they can scam. And I think people need to be protected from themselves also in the CBDC environment. And there you could think of different facilities to be able to track funds, being able to track them as they get onward muled in instant payment systems, in CBDCs, in different wallets, and then in order to get them back to the victim. Because if I get scammed, and we're probably getting, all of us, a lot of emails, SMSs, calls when someone is trying to scam us, and sometimes they get through. So the first thing I would like to be available when I get scammed is I want my money back, right? So those type of facilities to also for the CBDC to ensure that they're successful.
So do you think CBDCs needs to be cross-border?
I think that's a very interesting question. I think a lot of the retail CBDCs that are being thought of have a more like a domestic focus, but there are a lot of countries that don't have good money around. So I think it would be very good for a number of countries to have a more stable currency that they could use. Now they might be, I think that's part of the reasons why crypto became and spread like fire around the world, because it was better than what was available. And I think if there are strong CBDCs that could be used also abroad, I think there would clearly be a demand for that. I think then it also goes into questions around soft power, de-dollarization, other types of geopolitical aspects of it. If you let your currency to be used outside your own domestic borders.
And Marcus, from your perspective?
Yeah, I think solving cross-border payments, I think, is one of the benefits that CBDCs can definitely deliver. There's the international payment kind of arrangement at the moment can be quite, is quite expensive. It can be quite slow in some ways. Of course, it kind of depends on the international corridors that you want to exchange money. But CBDCs can deliver improvements in interbank payment settlements. and can also reduce counterparty risks. If you think about mitigating the credit risks in cross-border payments transactions, and you have a payment versus payment kind of settlement for transfers in different currencies, I think that's definitely one of the benefits that can deliver. But having said that, I have noted down 3 points of caution as kind of thinking of CBDCs in the context of international payments. I think one comes out of the work that we have done at the World Economic Forum, and it's about fragmentation. The system, the correspondent banking system that we have at the moment is a bit more kind of streamlined over the years and holistic in some ways. I think developing kind of bilateral kind of collaborations between countries in order to implement cross-border payments using CBDCs can fragment the international payment ecosystem. And also you have to streamline the economic incentives and understand better the economic incentives. What will the roles of banks be going forward in terms of international payments? And I guess the last point I could make is on these kind of new value chains that are emerging from these new kind of CBDC ecosystems. One key point that we have identified, and again, that's part of our work that we have done at the University of Manchester in collaboration with the University of Oxford, is the idea of innovation bottlenecks. So you really need to understand your new value chains that are emerging, and identify certain bottlenecks that can impact delivery of particular solutions and also jeopardize innovation. And the theory talks about, data, strategic bottlenecks, data bottlenecks, technology bottlenecks. So you really need to think hard about, these bottlenecks going forward.
Definitely. David, what do you think?
Well, I think if you're going to go through the trouble, the expense, and the journey of building a CBDC solution, it would be kind of crazy not to use it in a cross-border fashion. We live in a very global world. If you look at this area, one of the big advantages is your location, and the fact that you have so many trading partners. And if we look at international finance, and invoice financing, for example, for exporters is really difficult because there's a massive amount of fraud there. And since you can attach payments to digital invoicing, which can be validated on chain and all, you can increase financing options and opportunities for small and growing businesses. So for a really ambitious area like the Gulf, and given your size relative to your global power and influence, why wouldn't you want to have a CBDC? And what I'd like to see develop is we're working with several countries in the Gulf, and I'd love to see the GCC come together and have their own CBDC and prove the efficiencies of using blockchain and distributed ledger technology with wholesale CBDC and atomicity to show how much you can improve trade and collaboration between the partners.
That's amazing. Last but not least, going to Barney.
I think a regional CBDC is a massive topic in its own right. I think the Eurozone, the euro currency has introduced all sorts of legal, economic and financial risks that are barely understood and very difficult to manage and difficult to predict the effects of. And so I don't see that. I'd be concerned about that. I think a nation state needs its currency.
Barney, I didn't say a common currency, though. That's important.
Okay, fine.
I did not say a common.
Got it, David. Then there are issues about the reserve currency. Is it in everyone's interest for it to be the dollar or not? The CBDCs, if widely used, obviously could unsettle that. That may be a good thing or a bad thing, but that needs thinking through. The FX trading, here in ADGM, it would be the obvious place to do it regionally, I think is a good thing. And the fact that you can have delivery versus payment and on-chain settlement is definitely a good thing. And David's vision on that, I think, is compelling. Then the use of the CBDC around the world, that raises legal issues and practical issues of legal jurisdiction. I mean, is it going to be legal tender to settle retail trades in other countries using, for instance, a dirham CBDC? And unless those laws are changed, and the answer probably is no, unless those laws are changed, though, can those states do anything about it? The answer probably is also no. So are we going to move to a global use of a currency, regardless of state laws, where people go for the most pragmatic solutions that are the best store of value? And in which case, are you best off moving first, or are you best with particular technologies or not? And are you best with a two-tier system with the commercial banks in place, or a direct claim on the central bank? These are massive questions, and there are all sorts of legal issues surrounding them. But it's a very exciting topic. That's certainly the case, and I think it's exciting that this region and the UAE is taking a leading position on this.
Definitely. Wrapping up this illuminating discussion, I express my deepest appreciation to our esteemed panelists for their insightful contributions. David's perspective on market developments, Marcus's exploration of innovation bottlenecks, Barney's analysis of risks, and Chemo's strategies for success have collectively shaped a comprehensive understanding of the CBDC landscape. The question of cross-border integration resonates as a pivotal consideration, emphasizing the need of global cooperation and clear regulatory frameworks. As we conclude, it's evident that the journey towards fully realizing the potential of CBDCs is ongoing, and with collaborative efforts and careful considerations, these digital currencies can become a catalyst for positive change in the global financial ecosystem. Thank you to our esteemed panelists and audience for engaged participation in this thought-provoking discussion.